welcome to Scrolling with Ceazor. Today is January 23rd, 2026, and I've got a lot of tweets for you today. But before them, I will mention that this is not financial advice. This is all just my own biased opinions based on the tweets that I have selected to show you, okay? So here we go. The first one here is from Sherlock Hoddles. He's pretty fun to watch. He just tweets out memes, but the memes have some like underlying meaning and stuff like that. They're not just pointless memes. They're all pretty much crypto memes. So this is a pretty interesting one here. For those of you who can't see it, I'll kind of describe it quickly to you. Basically, there's a guy here who's like cheering, and it's a lion documentary. And there's a lion eating an antelope, right? And he's like, yeah. And then there's the same exact image, and it's called Antelope Documentary. And the same exact image of the lion eating, and the guy's holding his head like, oh my God, no, right? So this is like, he says, how technical analysis actually works. So I agree with this so much, like, especially nowadays with like, the opening of the markets. Like before, I believe technical analysis had more effect because the people who were trading were all using technical analysis of some degree or another to make their decisions. And this still is the case. Those people are still trading, and they're probably joined. A lot of them have joined the crypto markets. So a lot of them are still using technical analysis to make their trading decisions. However, there are a lot of people now in the space who don't use technical analysis. I myself, I generally use like a kind of vibe. Of course, I do some like, support lines and stuff like that, but I don't do a very in-depth technical analysis of my trades. I tend to use like, because I'm not doing individual full like clip buy and sells. I'm not trying to pick exact bottoms and exact tops. Now to kind of get into what I'm talking about, I'm going to show you this chart. If you're listening again, I'm sorry, you won't be able to see this. But I did tweet about this the other day and how I use like concentrated liquidity as well as like Carbon DeFi's reoccurring orders to do trades, right? So as you can see, like I have stable coins all down in this range. This is WSTE versus SUSDS. So two interest-bearing stable coins, but you can kind of think of it as ETH versus US dollars, okay? So between these two price points of 3,500 and roughly 2,900, I have stable coins sitting there to buy, and then I have this range above, which is about 3,700 and 50 up to 6,000, where I have Lido staked ETH to sell, right? So I moved this up a little bit last week. It was a little bit lower before, and I moved my empty space, my I guess you can call it my trading fee, or you can call it my profit margin, or my my gap, my spread, right? I moved that spread up a little bit last week when it was up in its highs, and it's come down into my lower range, and I've started buying again with stablecoins. Now, I really like this because both of these tokens are interest bearing, and they're if I'm sitting in one of them, at least I'm getting some APR, which is roughly around like between 2 to 5%, right? So I'm happy. I'm okay with like if I make a mistake in these ranges, and this is not my entire portfolio either. It's just a small portion of my portfolio that I use for this active trading. So I really like this kind of like, this is the extent of the technical analysis. I might look back in the past and say, oh, okay, there's a support here or a resistance here, and I might use that as like a line as the bottom of my range or stuff like this. So anyhow, I do use a little bit of technical analysis, but I'm not drawing tons of trend lines and support lines and using the MACD and all of this kind of stuff, because I don't think it's quite necessary anymore. And I'm bullish. This is a bullish strategy for sure. Like if ETH just continues to go down from here, then I will be kind of stuck in ETH, which kind of sucks. I don't have any stop losses or anything like that to exit out, but so I might have to make some stop losses. If it continues to go down, I might have to exit, but probably not. I'll just, this portion of my portfolio is so small that I don't feel the need to get out of it right away. Now, I do have a video that explains how I do this, so I'll link that video in the tweets and stuff like that, but let's move on to the next one. I spent a little bit too long on this one. Okay, so here we are, Makina. Yesterday I talked about Makina. I talked about how they're like, the wizardry that happened with Makina, how a black hat hacker was deployed a smart contract to hack the Makina pool, the curved pool with like a flash loan, and then a solver came along, forked his unverified contract and ran it himself, and then hacked the protocol himself, and a rocket pool validator got a huge bonus because of the searcher wanted to prioritize his hacking contract over the hacker's hacking contract, if that makes sense. So he gave a big tip to a rocket pool. So I had said yesterday that I think perhaps this might be like a white hat hacker. This might be like a paladin working for the benefit of DeFi, and it actually turns out to be true. So the MEV searcher, the person who was building the block, who forked the hacker, basically gave back all of the money minus a small 10% bounty. So he got his white hat hacking bounty free and clear. He doesn't have to hide the money. He doesn't have to wash it. He just made 10% of like 1,000. So it's 1,020 ETH. So he gave back 920 ETH, and he gets to keep the rest. Free and clear, legal, right? And he helped the protocol, all the people inside the protocol, to recuperate roughly about 80% of the losses. Now, the rocket pool, I just found out, like here in this tweet, it says that they're waiting for the rocket pool. They're trying to find the rocket pool validator who got that huge tip to build that, to take in that block. And the rocket pool, I've just found out the rocket pool has also given back the majority of that ETH. So about 82% of that loss has been recuperated already. And now, of course, Makina is going to deal with it and kind of figure out how to do this safely and give people back their share and all that. And you can follow Makina. But I lost a little bit in Makina, but not too much. Like I wasn't too overexposed to it. But I find this to be very valid news. Like our industry is maturing, and the paladins are getting paid properly, to incentivized to do things like this and to protect the legitimacy or the overall community, and get incentivized to do so. Now, because there's this like seal white hat safe harbor thing, like you sign up for this and you promise, there's a promise that if you hack us, we will not take legal action as long as you return, blah, 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 blah. So it's like a white hat dealing like kind of thing. So anyhow, Makina, that you can check that out and find out if that's interesting or not to you. The next one we have is Cap. Cap Money is another protocol I like. I'm a little bit biased. I've been farming these Cap tokens for a while. I also know the founder of this team. He's part of like my inner circle, so to speak. So this is not. He hasn't paid me to talk about Cap, but I have reached out to him to see if he would like to sponsor Scrolling with Ceazor. He's considering it and so forth. So maybe in the future they will. I don't know. Okay, but I do want to share this. So Cap has this like if you do certain aspects of this of the Cap ecosystem, like you hold Cap or you provide liquidity or you lend USDC to people who want to lever up Cap and stuff like this, then you can earn caps. So they had this thing called the Frontier program, where they were giving out Cap rewards, Cap points, and now they've kind of, that Frontier thing is coming to an end. And now they're going to do this thing called Homestead, which is basically another point system. And there's a lot of choices in here. But like, for example, if you hold some yield tokens on Pendle, if you hold just, empty stable, the non-interest bearing stable coin, the CUSD, you get caps. The Pendle, another Pendle yield token, lending USDC on Morpho, so people can lever up, right? So they can loop up. And then there's also some like delegator incentives now going to. Now a delegator in Cap is basically a large institution with a lot of assets. They stake, BTC, ETH, some LSTs, Lido staked ETH or whatever, some LRTs, gold or Japanese. So they stake these, and because they're staking these, they have the power to lend, to allow individuals or institutions or entities to borrow the USDC that backs CAP, the CAP USDC. So if you want CUSD, you have to deposit USDC and you get CUSD, right? That USDC can then be borrowed by anyone who convinces the delegators to back them. So if I have a really good strategy, I can talk to one of the delegators and say, listen, I got this really good strategy. Let me borrow some of that money. And then the delegator will say, okay, let me borrow that money. If I don't bring back the money with interest, then the delegator loses some of their stake. Okay, so that's how basically CAP works. You can check it out. I do have a video that explains it. But anyways, they have some, they're extending their points system with a slightly little changes to make it a little bit more effective of what they want people to do. Okay, so moving on. So yeah, the delegators also have a new point system, some more. If you delegate, you get more points basically. If you just sit there and you're not delegating, you're not encouraging people to borrow that USDC and put it to work, then you shouldn't be paid, right? You shouldn't just be paid just for staking. You should be paid more for actually finding people who have yield strategies and backing them, supporting those people. Okay, moving on. Here we have Aerodrome talking about Summer Token. As I mentioned, I'm going to pull up the chart here and kind of show you what the chart looks like. So a couple days ago, I talked about this Summer Token was going to go live. And as you can see, the chart is pretty scary in the sense that it's like down 95% or something like that. But this was what I mentioned as I expected. I expected this to happen because there are always mercenaries who were just farming and waiting for their chance to dump, right? And that's always going to happen, right? But now that they've dumped, they're out, they can only sell tiny bits now as they continue to be mercenary farmers. However, Summer is now also what was I trying to say? Summer is now, they're collecting fees and they're sharing those fees. I think it's like 20% of the fees or something are going to the stakers so if you do stake your Summer token, you lock it, you get more Summer tokens because they have inflationary rewards, as well as you're getting some USDC in the system. And then they do have a proper DAO where, they incentivize voting and all of this kind of stuff. So you can check it out. But anyways, Aerodrome is tweeting out that you can buy this Summer token on Coinbase and OKX immediately. Okay, within 24 hours of the launch of the token into the Aerodrome liquidity pool, Coinbase and OKX already have it. So this is what the power of the Aerodrome ignition system is if you use the ignition system, you get on-chain liquidity incentivized with Aero tokens and an LP with a gauge, right? But then your token automatically goes into Coinbase and OKX as well for that. I'm not a trader on Coinbase or OKX, but I know there's lots of people there. So you get more eyes and so forth. Now, I don't know the deal. I don't know what happens under the hood with Coinbase and OKX and Aerodrome, if there's any kind of transfer of assets or anything like that. I'm sorry, I don't know this stuff. And maybe that's a question that I would like to know, but I don't know. Okay, so let's moving on. Here we have Bojan. Bojan is a person I follow. He's a part of the Liquidity team, and I like him, and I like Liquidity, so I want to share what he's tweeting. Now, he says, new privacy tool just dropped. You can fund a new wallet or request payments via Houdini Swap. How it works. Create a payment request. Choosing from many tokens and networks, native Bitcoin is supported too. Share the link with the payer. They can pay with any token. Houdini executes the swap. Receive funds without the payer knowing your wallet. That's pretty cool. Okay, because this is one of the things that we kind of lack in our in our ecosystem, or in our in our ecosystem right now, is that, like, you send someone a wallet, and they pay you the wallet, they pay into the wallet. Now they can see all that wallet has done, and so forth. So even if you're just like, there, for example, for me, like I'm looking for sponsors, and someone wants to pay me, then maybe they pay me, then they can see all the other wallets that are paying me. And I don't know if that's something I want to hide, but it's definitely like, privacy is definitely something we have to kind of take seriously in some ways, because we like crypto is not protected by the traditional systems. Like, the police don't care really so much. Like, they're starting to care a little bit more. The banks definitely don't care. The government's not going to force anyone to, revert a transaction, because it's impossible. But so, like, if you hold your assets in the traditional banks, then you're a little bit safer, to be honest, because they won't allow things to happen. Like, if you go to the bank and you're like, hey, give me $100,000, and they're going to be like, well, why you need this money? And they're going to like assess it, and maybe even call the police, right? Like, if you look distressed, right? Like, maybe there's people in your house holding your wife hostage or your kid hostage or something like that, right? Then they're going to call the cops, maybe, and maybe the cops will follow you, and maybe you will be saved, or they can revert those like transactions later, right? So crypto has kind of opened the door to this kind of problem where people who have huge bags, they're now targets for criminals, because if you send your Bitcoin or your Ethereum to somebody because they're holding your family hostage, there's no way to recuperate that. Now, the police could catch those criminals, and they could, prosecute them, put them in jail, try to get that crypto back from them and return it to you. But it's way easier in the traditional bank to do that. So privacy is becoming more and more important for this case, as well as to just protect yourself from like government entities, like the Canadian government, like freezing all the bank accounts of people who are just like protesting the COVID vaccinations, right? Like stuff like this. Okay, so let's moving on. Here we have Stacy, who retweets Green But Red. Green But Red has a My Privacy Thesis 2026. You can read it. And she basically retweets that, but she tags all of these possible privacy watch list people, okay? Entities or protocols, right? And there's quite a few here. Aztec, Railgun, Allo, like there's just a big list here. So I don't want to read through all of them. I'll just retweet her and you can check it out. I'll add her tweet to it. And then you can also check out Green But Red's privacy thesis and why he thinks it's going to be a big, important part of 2026 and like the new meta, so to speak. Now, I'm not telling you to go out and buy these tokens. I don't know which tokens might actually be good. And if you are considering investing in the privacy, make sure you understand how the protocol works and whether or not you think it's going to have product market fit and demand. Okay, so and maybe your token is going to actually support the system and give you like powers over the system in some way that's meaningful, right? Like find utility. Okay, moving on, we have Karl Marx on chain. He says he wrote an article here about like how to turn structural weakness into a system advantage, and he's basically written a long article on Convex's DAO system, and it's pretty like you can read through it, but like I'm not going to talk too deeply on it because it's basically just like a review of how the Convex DAO system works and why it works. Okay, because DAOs are great, but there's some serious problems, and Ignis says them here. Like number one is like the core team and the foundation tend to be the main voters, right? They push things through. And there's some examples of like how Uniswap only like 10% of uni holders are the ones voting, and only 10 wallets like push the last protocol update through. Like I believe that's the fee switch, but I'm not positive. And then he's like, yes, because people aren't getting paid. People only care about doing things, they get paid. And if you look at like traditional governance, it's the same thing. Like, you don't see anyone volunteering to go to Congress and pass bills. No, they're all getting paid, right? And they're even doing insider trading now because they want to get paid even more, right? So like their salary is not even enough to incentivize them. Now they're doing insider trading and weird stuff like that. So yeah, like in governance, there's always been a requirement. Pay me and then I'll do it for you, right? So this is basically what the DAOs are needing to do. And Convex is a great example of a DAO that has been successful on, governing things that are meaningful, which is the like direction of incentives, and paying the people to participate in that governance. Okay, so you can check out this article and maybe learn a little bit about Convex if you don't know about Convex already. Next one, here we have a long article by Chase Manning. I tried to read through this mostly, but it's kind of hard. It's very technical in the sense, like, there's no math, but he's basically, let me read to you the title of it. It says, Hyperliquid Precompiles an Inconvenient Truth. So he's just talking about, like, Hyperliquid's precompiling. And what this basically means is it's like, Hyperliquid has two things. It has Hypercore and Hyper EVM. So it has two sort of blockchains. It has the blockchain for the perp trading DEX, right? And then it has the EVM where there's all kinds of it's like an ecosystem of protocols, right? And they wanted these two things to interact with each other seamlessly and instantaneously. So they built this thing called precompiles where, you can make changes on one from the other. Okay, that's basically the idea. So he's just kind of laying out how difficult it has been for him to produce something that interacts with this precompiling mechanism. And I think it's a good read, especially for someone like who's trying to build and who wants to understand precompiles better and worse. And if you're building some sort of ecosystem like the Hyperliquid ecosystem, this might be something for you to check out. Okay, next one we have Slapjack. Basically, he's talking about Flying Tulip's raise. I'm biased on this because I plan to participate in this. It's like the main thing here is perpetual put options. So like you can almost not lose your money. Like, you just put it in here and you're going to give up some yield, right, on those assets if you put it in here, but you get potential upside of both. Like I plan to use Sonic tokens to participate in this. And if my Sonic pumps, I can pull my Sonic back out. If Flying Tulip token pumps, I can pull out Flying Tulip tokens, right? So you can check out Flying Tulip. I think it's a pretty cool protocol. I've got videos on it, and and that's it. Okay, so you can check it out. He's basically saying, will Andre do this again? And he's, just highlighting this. So again, I'm biased on this, but we'll see what happens. Okay, let's moving on. So here we have Gum. Gum is a 0x Gumshoe. He's got this article called "It's Time, Stop Believing in Crypto." It's kind of a nice read because it's like, it's kind of just like, it's not fluffed up. Like when you read it, it's almost written in shorthand, and that's kind of nice in the modern day. He doesn't write these long paragraphs with like flamboyant language and stuff like that. It's very like, he doesn't even use periods. It's just like, well, he's got some periods and commas in there, but anyhow, like it's very shorthand written. But he says it's called "It's Time, Stop Believing in Crypto." So basically he's not saying you should give up and leave crypto. He's saying that the whole narrative of believe in something is dead. We don't need this. The crypto is already mature, and now it's time for you to mature, to start looking at data. And the way I like to say it is look for utility. Does this thing actually do something people want, right? Or like if you're going to buy something, buy a token that supports something that people want, not just because Ansem says this thing's gonna moon, right? So this is kind of what I'm taking from it. You can read through his article. It's not a long read. It's pretty short, but that's basically the message. Like this, the ecosystem has matured, and so stop just believing in like faith-based investment strategies. Okay, here we have a tweet from Sky Ecosystem. It's kind of nice to see Sky still kind of kicking along. Like they are the OG of OG DeFi. They kind of pivoted to Sky from MakerDAO, and now they're like, the Sky team joins Morpho as a Vault curator. If you go to Morpho, there are a lot of Vault creators, and I find this to be a great thing and a burden. As a user, it's a burden because now you have more things to research. All these curators have different risk profiles, different risk strategies, different biases, and different like kinds of incentives to use them. So if you go to like Morpho, you'll see all these different vaults that are very similar, run by different entities, and the APRs are comparable. And it's so hard to kind of decide which one to use. But that's the benefit of Morpho, is it's like decentralized in the sense that like anyone can become a curator, and anyone can run vaults, and just so you just had like, would I put my money in a vault run by the Sky ecosystem? I'm not sure, because they've done some stuff in the past that I don't really like. However, I do hold SUSDS. So would I use them? I don't know. Like I'd have to assess it. But I do like that Morpho kind of does this, but I also don't like it, right? It becomes harder to figure out what is a good, safe, set and forget strategy, right? So anyhow, you can check that out. Here I have an article from Beefy. Beefy's talking about financial building systems with Starworth and Octave. You can read through this article, but basically the main idea is like there's these two entities that have helped Beefy to be very, very transparent. So it's like there's one sentence here. It says that's very 99% are now. Okay, let me read a little bit back. Revenue from Zap contracts can involve hundreds of tokens and thousands of transactions. 99% are now processed automatically and accurately, giving us comprehensive live performance stats without waiting for end of quarter reviews. So yeah, if you go to Beefy, you can almost always trust the numbers on the website. There are other protocols that just like hard code shit, right? Like APR is 3.2%, and then once a day they change that number, or whatever the hell, like, or you can't, or those numbers are just kind of loosely based on some other number posted somewhere else, and you don't like. But Beefy's actually using real hardcore transaction data to produce their numbers. So if you see an APR on a Beefy Vault, then you know it's actual APR, or it's very close to the truth, right? And I think Beefy is very good for this. They're very transparent. If you use Beefy, you sometimes are taking some risks, because some of the vaults you are betting on the token inside the vault, right? Or the LP inside the vault. And that's something you have to do. You have to do due diligence on. However, you can trust that the data that Beefy is giving you is truthful. Okay. Anyhow, let's moving on. I got a few more tweets. I'm doing pretty good for time today. Here we have Jordy of Crypto Land. He says the hype sell-off isn't a fundamental failure. So yeah, if you look at the hype chart, it looks pretty bad these days. Let's see if he's got one. Yeah, here it is right here. It looks pretty bad, down from like $60 to like $20. So it's pretty scary, but let's see what he says here. And I want to, there's a few key things he says. He talks about. So a wallet cluster linked to Tornado Cash has been programmatically dumping millions of dollars worth of hype directly into the order books. This entity chose to sell in the most damaging way possible, constant automatic selling every few seconds. So yeah, now why would he do that? Number one, it's like TWAP. He gets the less price impact. It's harder to, he doesn't print a huge red candle and take a ton of slippage, right? Instead, he's just constantly selling. Anytime there's any kind of buying, he's just selling and selling a little bit more than the buyers can keep up with, and it just does damages. Now, who the hell knows? It says it was funded by Tornado Cash, so it very well could be competitors, right? Just attacking their ecosystem, like corporate espionage, so to speak. However, it could also be hackers. Like it could be just a hacker who stole money and washed it through Tornado Cash, or it could just be someone who's managing their portfolio and has a lot of hype, and they washed the money through Tornado Cash before, so that they're private, which is nothing nefarious or illegal. And now they're trying to exit their bags, right? So it's really hard to say what the case is, but you can read through his thoughts on this and kind of figure out what you want to do if you still have hype, whether you want to enter, you want to exit, you want to, whatever it is you want to do with your hype. You can read through this data and have a better understanding. Okay, so here we have Simon Dedek. So yesterday, a few days ago, I talked about him, and I'm liking his tweets. Okay, so keeping them short, like hard punches. Okay, so let me read what he says. To all the lazy VCs and investors out there who deploy capital but don't actively work with their portfolio companies, there's no better feeling than having founders genuinely appreciate your input and effort you put in. It's not just about the gratitude. It's about actually getting the chance to meaningfully contribute to shaping the future you believe in. This is exactly what motivates me to get up day and to keep going even in the darkest times of crypto. ROI is great, of course, but I can tell you this is far more fulfilling. And ironically, it usually leads to better ROI anyways. Can't highly recommend it. So I based on what he's reading here, based on what I just read out loud, it kind of sounds like he is a VC and he's kind of sharing his playbook. And I agree with you. Like if you're going to invest in something, you can contribute in many ways. You know, you can build memes if that's what you do. If you buy a token, whether you're a VC or just an individual anon, you can contribute. You can participate in governance. You can share ideas. You can shill it. You can build some smart contract thing on top of it. You can give feedback. You can do a Dune dashboard. There are so many ways you can contribute to your own bags. And instead, we have people who FUD their own bags, who complain that the team is not working hard enough, that the protocol's price chart looks terrible, and that's how they think to contribute. Let's just bitch and complain. So yeah, there are so many other ways. And what he's saying is don't stand back on the sidelines either. Like don't just sit there and do nothing. You protect your bags, right? So I like this meaning. I like his under thoughts here. And yeah, so anyhow, that's Simon for you. The last one for today is Frax Finance. They put out this this article called "The Third Default," and it's talking about Frax USD, okay, and why Frax USD is a good stable coin. And you can go through it and you can read it. There are a lot of. I'll just read the headlights. So number one, Frax has a superior peg keeper, FRX USD, right? Validators from the largest DeFi protocol. Oh, validation. So yeah, they have, Aave likes them, right? Institutional adoption. They have these institutional partners. Why this structure is so hard to replicate, you can read through that. And third default is already forming. So what does it mean, third default? People, if you take profits, what do you take profits into? Most people take profits into USDC or USDT because they think it is safe. If I take profits into any other stablecoin, then I get smart contract risk. If a hacker hacks my money, I don't get it back. It's impossible for me to get it back. Institutions aren't supporting them. So every stablecoin out there, all of them would love to become the third default. And that is I feel okay putting my assets into this stablecoin. Now I have several stablecoins DeFi stablecoins that I think of as my third default, so to speak. I like Bold. I like Frax USD. I have both of these in my assets. And I also like Sky USDS. So I'm using these kind of also as my third default. Maybe I can say fourth and fifth, right? And it depends. Like I try to diversify my exposure to several of them. And I also use the APR because I'm always using interest-bearing stablecoins. So I also use the interest-bearing versions of them. And I use that to assess whether, which one I should take profits into. Okay. So that's it for today. I hope this has been interesting and useful for you. And thank you so much for listening, and goodbye.